Hi there, we back in our favorite place with people. But it's yeah, not favorite. But anyway, it's good to see you guys again. It's a wonderful week. You insist on wearing hats indoors. What's up with that?
I'm copying you. You used to do it.
Yeah.
So it must be kosher.
I
Remember, I'm
guess.
the 6-year-old.
I guess. You must be careful what examples you say.
Well, he thinks it's uncouth. I really don't care.
And you're wearing a vest every week,
That's not
a woolly vest. What is it called?
Knitted
So what's it?
polo shirt.
That's
A
called a
knitted
polo shirt.
Yeah,
Did you like buy a whole bunch of these when you went front?
I did actually.
Oh, right.
Yeah.
And blue blazers. Anyway. And are you wearing bright colored socks?
Yes, I am. I'm learning all the wrong lessons from you lot.
No, that one you're actually on point, and I would actually think that you need to do this more often. Even new shoes.
Well, I
Beautiful.
certainly, they were, did you think
Beautiful
that I dressed
shoes.
myself today?
Absolutely
clearly not.
Absolutely not. But kudos to whoever dressed you.
Yeah.
They certainly know what they're doing.
Okay.
I'm not sure about that. And you've got, well, at least you're wearing socks today.
Well, it's winter.
It's a big improvement.
No, it's winter, and I tend to want to keep my ankles warm as far as possible. So.
Anyway, are you drinking anything interesting today?
Earl Grey, but I'm actually having a cake, courtesy of Linda. It's her birthday, so I'm happy.
How come
Thank
you're
you
the only
very
one who
much.
gets them?
I don't know why, but
Well, we're banting, so
But this banting friendly cake
yeah. Well, that one is not banting friendly, unfortunately.
looks very decadent.
Mm.
What are we having?
Well, we're having something quite interesting. It's a gift from my brother
From the
from
gods?
another mother and running partner, Widzo. So he's also a fan of the show, so he decided we should drink a tipple on him. So he got us a bottle of this Glenfiddich, the Select Cask. It's basically a single malt that's been matured in European oak, a red wine cask, and an American bourbon cask. So should have an interesting mix of flavors. I've never actually had it myself. So we'll give it a shot.
Oh, I mean, cheers to
And,
Widzo. Nyamzio. Thank you very much. I can smell
Cheers,
it from
Widzo.
here.
It's rich and full of flavor.
Yeah, it is. Nice bouquet. Anyway, gents, it's been a whirlwind week. Lots more reversals and counter reversals and so on. But I think maybe we need to step back from these micro changes and let's talk about what's really happening in the big picture. Why are we seeing the goalposts shifting? Why are we seeing the policies being made and unmade with such rapidity, if there's such a word, or such frequency? Probably rapacious.
Yeah.
All right. Okay. We haven't seen this for a while, where literally every day there's something in the financial news that is significant. What's the core problem? What are we trying to fix? Or what's causing us to zig and zag?
Thank you very much, George. I think what we do have, in a nutshell, is a monetary policy problem. So we seem to have this predilection to print as much money as we can. And part of it is historical and constitutional crisis, where Zimbabwe is certainly the only country I know in the world that has an overdraft facility directly with the central bank, up to 20% of the previous year's budget. So when you look at the previous year's budget, close to $5 billion using the unofficial rate, it means that the government can borrow up to $1 billion without going to parliament. And more than just
without
that,
even going to the open market.
in fact, that's
They can just write.
that's the
They
unique.
can write checks.
that's the unique thing about Zimbabwe, is that Zimbabwe is only one of the few countries where a government check doesn't bounce, primarily because of this overdraft facility. So if you look at everywhere else around the world, and I'll use the Fed as a good example, is that when they print, what typically happens is the government, the US government, goes out in the open market and issues out a tender for bonds, and the central bank buys those bonds. Now, that is actually a good economic policy. Why? Because then the market is quite aware of how much money the government actually needs and how much money has actually been printed. So you almost know immediately that this is how much money the central bank or the Fed has
I want to push back a
actually
little
printed.
bit on that.
No, but
in
before
Zimbabwe,
you push back, you say almost. It's actually not almost. You know precisely, because
precisely.
remember last week we talked about money illusion, but this doesn't happen because when you do a formal TB tender process, the stats are known before the TBs are issued. You actually know that
you're quite right.
the government wanted to borrow $1 billion. The market offered them 800 or 1.2, and they eventually the central bank took it buying at this rate, and the paper is going to be issued next week on Tuesday. So the money is coming into the market next Tuesday.
No, absolutely. So that's one, and then the other thing is actually
but
Congress and Senate.
I want to stop you there and just push back a little bit, because I think what you're creating is the impression that we have a framework that allows for irresponsible behavior, which is unique in the world. And you use the US as an example. And often in the, over the last few years, they've had a debate about raising the debt ceiling. And there's been conversation, by the administration, controlling the party controlling the White House, to say where they were not getting their way in terms of getting the debt ceiling raised, that, well, they actually have the power to mint $1 trillion coin and issue it and solve their. So it's not that they don't have. Let me finish.
You're actually missing the point.
No, it's not that. It's not that other countries don't have frameworks that allow them to do irresponsible things. It's that they consistently choose not to do irresponsible things.
You're not getting it. Actually, the point is the market will punish you. So if in the US, if the Fed continues to buy treasury bills, the market itself will punish you, because the market can actually track how much you're actually buying and when you're buying it, and it reflects on the yield almost immediately, and the market will punish you.
But the same,
right?
Now, if I'm playing devil's advocate, the same happens here, right?
No,
the currency runs.
So when you say 20%, remember what I'm trying to tell you, right? When you say
no, we can't remember if we don't know.
Okay, when we say 20%, 20% is a huge amount, and this is a relic of the Rhodesian government, because they were at war.
But
so
the
they wanted
government actually fiscally was much more disciplined than
no,
post-independent
Remember, they were funding a war.
In terms of inflation, was significantly lower than post-independence.
In terms of inflation, yes, but they were there was over expenditure.
There were
because
deficits,
remember they were fighting a war, right? And what they created was an allowance that allowed them to fund government expenditure without having to go through parliament. Now, I explained one instance, which is this allowance of 20%, but it goes beyond that, right? Where constitutionally, or using the Reserve Bank Act, if it's about 20%, then Parliament is supposed to. So our debt ceiling starts at 20% above last year, an overdraft of 20%. So it gets to 21%, then you need Parliament to approve it. But this is the very interesting phenomenon in Zimbabwe, is that actually you don't need to get approval. You can get approval 3 years after the fact, like we did in 2019 with the finance bill, which popularly is known as the Condonation Act. And the Condonation bill was approving over expenditure, 100% over expenditure of 2016, 2017, and 2018. And this only happened in 2019, right? And I'm saying everywhere else in the world, where we talk about accountability, and you talked about them being able to print $1 trillion, is that the people have the right to approve it. And if the Senate approves, it says if the Senate agrees that yes, indeed, we want to print money, and everybody is aware that we're printing money, then fair, that's democracy,
That's
right?
actually not the case. So the
That's
point of
democracy.
I actually picked that example specifically because the U.S. Treasury has the right to mint $1 trillion coin. They don't need congressional approval. So this has always been muted when the discussion about lifting the debt ceiling got heated. So they've never done it.
The question you're
but
not
they
answering.
No. Wait, they can mint it.
Mm-hmm.
Yeah.
And everywhere in the world, central banks have the authority to mint currency.
Mm-hmm.
But minting currency and the government borrowing are not the same thing.
They actually are not.
They can mint $1 trillion coin and just put it in the
And money
vault.
supply is still the same. And actually take away $100
notes?
$100 notes with $1 trillion and replace it with $1 trillion coin.
But the government cannot borrow more than they are empowered to do by law. Which is why the budget of every year is an act of parliament. There's a law made annually to regulate government spending. It's a law.
Yes, I hear you.
And I want to pick up the constitutional issues.
Down a rabbit hole here.
Can I? There are a number of constitutional issues that I want to raise because I think the things that you're raising, while it's good, I think this is a serious matter that we need to, hone in, especially on constitutional matters. There's an article that actually the current minister, I don't know what, but it was Larry Mavima, who actually showed that the problem with our system at the present moment, and this was in the 80s. So this is not even in 2022, but this was in the 80s.
So
that
when he was not when he was not in the in
government. But he wrote a fantastic paper, and he highlighted that the big problem that we have is the budget is actually done by the Minister of Finance when it should be done by Parliament. So anywhere else across the world, typically what happens is Parliament is the one that actually comes up with the budget and then gives it to the Ministry of Finance to actually implement. Whereas here, it's actually the reverse. So it's a secretive thing that happens where the Minister of Finance goes around town and picks up ideas from everyone and then comes up with his, special bouquet and says, this is our budget. And then Parliament must approve, which is not true. The budget must come from the people. Expenditure, everything must literally come from the people or representatives of the people. So these are three constitutional issues that allow us, or constitutional crisis that allow us, any politician in power, to print as much as they can. And that's why.
I want to push back on that. I think that maybe I'll argue it from a Zimbabwean perspective. And that is to say that the existing framework that we have with all these flaws that you're pointing out, right? It doesn't preclude us from doing the right thing.
It's impossible. If the US with stricter,
if the holders of public office were determined to run a balanced budget, they can within the current framework.
But you see, okay, I won't say it's impossible, but I would say we don't design systems with the assumption that good people are going to be working in these systems. I mean, you and I have our professional backgrounds in auditing. Systems are designed with the underlying assumption that there will be bad actors. Mm-hmm. So we can't live in fairyland and assume.
Sometimes it's not even a bad actor. It could be a mistake.
It could be a mistake. Yeah. It could be a good actor who turns bad because of opportunity.
Mm-hmm. Okay, fair enough. I'll concede the point.
I mean, do you leave your front door open?
No, of course not.
Why?
Yeah, no, point taken. The system definitely is amenable.
So we're just saying if the people and the people's representatives want to print money, then let everybody know that we're actually printing money and we agree to it. Mm-hmm. So everywhere else, that's why they have very strict constitutional and legal means in which government can actually print money. I mean, the Fed also cannot buy. I mean, we've had an interesting debate in the US, right? That the Fed can only buy US treasuries and cannot buy stocks. Cannot buy equities, cannot buy real estate. And these are some of the measures that they've put in place so that to ensure that it sticks to its strict. Yeah. And there's a particular reason that we do so. So we're saying the law allows us to do quite a lot.
Look, we're getting very technical here, but going back to the simple example of why you lock your front door, what you're saying is we've built a house without a front door.
Exactly.
And then we're surprised when every once in a while there's
When
a
the-
sofa missing.
When the caretaker is the one who's stealing the sofa.
Okay. So what is the solution? What's the way forward? If you had a blank piece of paper and it was up to you to set up a monetary policy framework that would ensure that we don't see this inflation.
Before we go to the solution, I think it's been a while since we've defined monetary and fiscal policy. Almost a year, I think. We did that in season 1. Couple minutes just to explain the difference between monetary and fiscal and why it's important that we dwell on monetary.
Okay. So, because fiscal is very simple and straightforward. It's how much money we have in government's treasury from taxes. So it's that simple and straightforward. How much money we're being taxed, and the government, which is within the purview of the Minister of Finance, and how much does he have in the treasury. And typically, the most we've ever received in our treasury is about $3.5 billion. And then
you're going to confuse us now. Okay.
Okay.
So fiscal is how much money the government is collecting as tax, and how it's spending it.
That's fiscal policy. And then monetary policy is how we are managing the currency and the money, notes and coins in the economy.
In the economy. So monetary policy is everybody's money.
Everybody's money.
Fiscal policy is the government's money.
How much the government is collecting and spending.
So why is it important that we dwell on monetary?
Okay, so on monetary, because first there's this phenomena that we have where we do actually have a granary or a house that doesn't have a door. So the first thing that we just need to do is make sure that we actually create a good, safe environment for our money. But having created a good, safe environment for our money does not necessarily mean that, thieves won't come in and do whatever they want to take. But I think that it is very much our fiduciary duty as society and as people, as policymakers, that we make sure that we have a good, sturdy and protection of our money.
But maybe I'll also come in and help you, right? And say, two of the classical functions of money is a measure of value and a store of value. And so the money we have performs one function of allowing us to determine how much a bottle of whiskey is worth. So we can exchange a bottle of whiskey for a certain quantum of money. On the other hand, when you've worked a day and you get given money by your employer, you can store the value that you've created in the day in money.
Mm-hmm.
Now, so that means you can now convert your day of labor or something.
In fact, in
into a bottle of
economics, we
whiskey.
call it it's transfer of labor hours into monetary terms.
Yes. So now you can convert your work into a bottle of whiskey through the intermediate function of money.
Mm-hmm.
Now,
in fact, that's almost impossible. So that's why you're better off transferring it into a piece of paper, which can buy anything.
Exactly.
Yeah.
Because you can't directly exchange your hours of work with a bottle of whiskey. Now, that whole system assumes there's a certain quantum of money in circulation. Now, if that quantum of money changes while you're holding money and not bottles of whiskey, but the number of bottles of whiskey hasn't changed, the amount of money you're going to exchange for bottles of whiskey is going to change.
Inflation basically.
There's transfer of wealth. So the situation that you just created, right? We have a given stock of money, and everybody is holding on to money and not bottles of whiskey. And for some reason, someone introduces new money in our economy. What it just means is we can't buy as
They've
money.
diluted all our money.
Yes.
Exactly. And that's a tax. That's why inflation is called a tax. But dilution of money means that someone has benefited. Because there was
that guy who just came with pieces of paper who didn't work.
Mm-hmm.
Yeah.
The rest of us spent a day in the fields and we got money and we thought we were going to get a bottle of whiskey. And there was enough whiskey for everybody with the money we had. And then some guy who didn't work shows up with money and also wants whiskey. It means
gets away with it.
Some of us aren't going to get whiskey, or we're going to have to spend more money than we thought for the same amount of whiskey.
That's the insidious nature of inflation. It basically it's a wealth transfer from everybody with a bank balance to the issue of the currency.
And this is why it's important that we govern the ability to create more money in the economy, or even indeed the ability to take money out of the economy, because it
or
affects.
at least be transparent about what's actually happening with everybody's money. Why? Because it's now actually affecting the amount of labor you put in, right? Because if you know that the amount of money that you got last week for X amount of hours of labor has changed, it means that you're going to work
You have to work less or more,
to receive or to
be able to afford a bottle of whiskey.
Yeah. So it actually goes back, and this is an important thing, that it actually goes back to our low productivity and low production levels, right? Because it actually doesn't make sense to work for 30 days, and then at the end of the 30 days, the money has lost value.
I actually think the most harmful aspect of high inflation, so if we had a consistent policy, in terms of the quantum of money that we're printing, or our inflation target, and we were honest about it. So if we say, look, we're actually quite comfortable with 30% annual inflation, and we're going to stick to that. People, so what the tax effectively is, and you plan your life around that as an individual or a business or other economic institution, and you could actually, hear me out. Yeah, but what I'm saying is,
it's a problem.
The problem with Zimbabwe.
We're not going down that rabbit hole.
No. Can I make my point though?
The expectation.
Okay. Let him make his point.
Can you use? There's a reason why I'm saying this. In your example, can you use 4%?
Okay,
don't say 30%.
So let's say,
and I'll tell you the reason why you can't use.
Okay, we need to go to a break just now.
So
4%.
If it's 4%,
make your point.
Right?
4%.
People can plan their lives around that. But the problem with the current dispensation in our country is that inflation is high and extremely volatile. So you can't plan your life. You don't know what the tax is going to be effectively, because for the second half of this year, it could be 50%, right? If the trends that we've seen in inflation continue or deteriorate, right? So why would you make investments and plan to be productive in the second half of the year if you have no idea, or if it's reasonable that you could lose 70% of your value through inflation?
So we've only looked at one side of the equation. There's the other side, and this is the reason why you couldn't use 30%. Because ideally, if you say 30%, then real interest rates will be somewhere above 30%, so 34%. Imagine an economy that has interest rates of 34%. So if inflation is 30 and you've got an interest rate of 34%, then savers are not losing their money, and they're actually quite happy. Mm-hmm. But which country do you know, or which economy do you know that can survive production and output at an interest rate of 34%? That's why you want it to be single digit, because if inflation is single digit, then savers are asking for just a little bit of return. So they're asking for.
Okay. We need to take a break.
I think that brings up an interesting.
Okay. We need to take a break. It's been good having you along. Please stay with us. We are going to take a very short break. We'll be back in a couple of minutes. Welcome back. At the risk of allowing you to go down a rabbit hole, you were desperate to respond to Tinashe before we went away.
Well, I wouldn't use the desperate, but I did want to just.
You were hopping up and down.
I did want to make an important point that I think is relevant for our monetary situation here. That if you have positive real interest rates, right? Yes, at 34%, that's very bad for productivity. But what tends to happen in any market with real interest rates is that inflation and actually tends to taper off, because it's savers are getting a real return on their money, and people tend to, so any investments happening in that market are investments that are going to produce an interesting return, because most people are better off just keeping their money in a bank earning real interest.
I actually agree with you. That's why I said, therefore, when you talk of stability, you never talk of 30%. Yeah. When you talk of stability, you're talking of.
I think you guys are going down a rabbit hole.
I agree with you.
Okay, you guys can have this discussion another time. Solutions. How do we get out of this quagmire? Because clearly, whatever we've done for the last 50, 60 years hasn't worked on a sustainable basis. We've gone through this cycle after cycle of high inflation, excessive government expenditure, which leads to money printing, which leads to high inflation, which leads to
Zimbabwe in 2022. But okay. I think you are very passionate about the idea of a currency board. I have some other ideas, but let's hear you out on the currency board.
I think that so I don't just want to talk about the currency board, but I want to talk about the position that Zim is in internationally and where we are.
But I think that's obvious to everybody. I mean, we are in a hyperinflationary economy where if you use government,
what do you have for lunch?
Can you hear the point?
No.
I haven't even made my point.
But I think that
I haven't made my point.
Yes, I know you want to make
your point.
No.
So okay, children. Okay, one at a time.
I haven't even made my point.
One at a time. Okay, Tinashe first.
So my point is, Zimbabwe is in a very unique position where internationally, globally, as well as regionally, there's a transition to a single monetary union of sort. So if you look at Africa, if you look at SADC, if you look at East Africa, everything that's happening, we're transitioning into a free trade zone. We're transitioning into a unionization of monetary policy, and that is inevitable. So we're in this position where our past is such that we cannot continue with the monocurrency or with the current central bank the way it is. That is quite clear. But our future clearly is leading us into a free trade zone and into a single currency, into a common currency, whether it's in Africa or it's regional. So the position where we are in, a currency board actually is the best solution, because what it does is a currency board is just purely a monetary policy, a monetary board, and by board, we mean an institution or a process in which our currency, the Zim dollar or whatever currency, local domestic currency, is anchored by, or the issuance is anchored by a stronger currency or a basket of currencies. And this anchor basket could very well be our trade currencies. So we would have the US dollar in there, we'll have the Rand, we'll have the yuan, and
maybe
euro.
And euro?
Yeah, euro or sterling, whatever it is. But what it means is any issuance we have in the country is driven by how much we're actually is in our deposits and reserves. So that way we kill two birds with one stone. The first bird that we kill is the inflation problem that we've continuously had. We've never had single digit inflation. So once you do that, it means that you kill off the inflation plague that we've had for over 42 years. Then the second thing is it almost transitions our industry to realizing that the future is not about a soft currency. The future is about production and productivity. And that's where we're going. Because when you open up the borders, once you have the free trade zone, you open up the borders. You have to be competitive. It's not going to be about the currency that you use or domestic currency or tariffs. So it actually anchors us very well to look into the future and plan for our future. And this will actually put us in a very, very, very good position because we are way ahead of Zambia, Malawi, Mozambique, and everyone else. And it
In
brings in
terms
the
of
discipline.
we're ahead of these countries. How?
We'll be
If-
ahead.
if
If we
we-
put it in, we'll be way ahead because at least we would have adjusted to a situation where currency is not a competitive advantage at all.
But who managed this relationship between the amount of Zim dollars in issue and the currencies that are backing it up? Who managed that? And what will stop them from misbehaving?
Okay, that's actually a very good point. So how it works, usually, and there are many ways in which you do this, and usually I give a good example that I always use is Germany. After the World War II, its gold was actually in Fort Knox in America, right? So it's very possible for our gold, for our deposits, we've got about 1.4 or so in FCAs, could very well be deposited either in the SADC Secretariat or in the South African Reserve Bank.
Mm-hmm.
And that's
In the African Development Bank.
African Development Bank.
In a trunk at the bottom of the ocean, it doesn't matter.
Well, it matters in the sense that when you're talking about medium exchange and store of value, you need someone who's with credibility who can actually say to us, actually, this is how much money you have, and this is how much money
Trunk
you
a trunk at the bottom of the ocean.
Okay,
Okay.
hyperbole.
Because why it
Talk
matters
about
is,
houses with
you know,
missing
we've
front
got-
doors.
we've got about $2 billion in the National Metals Bank, right? And that is a cause of concern because those savings are supposed to be in the capital markets, and if they're in the capital markets, then they're actually out there for borrowers. So imagine if those $2 billion were actually with the South African Reserve Bank, right? It means that we can actually issue out Zim dollars against those $2 billion, and then the banking sector can actually lend against that. So it's free banking in the sense that any bank can lend whatever it wants, and it's taking the full risk. There's no central bank to accommodate them and do whatever. So their risk management policies have to be very, very strong as far as the banks are concerned. But what it means is they now can attract all that money that's actually in the National
there
Metals
can
Bank.
be a central bank, but the central bank must have its own money. The central bank can't be using everybody else's money to underwrite the risk.
Well, maybe that's an iteration that you're looking at, but in my understanding, or the one that I call for, is actually where we disband the RBZ and we create two separate institutions. One is a currency board, which is a monetary board, right? And then the other is a financial regulatory institution that then supervises all the banks and ensures that they adhere to good corporate governance and whatever fiduciary rules that are there. And then the other now becomes purely the monetary board. And the monetary board, what it does is just, so for example, let's say last year, where we had this boost of earnings, Forex earnings, the 9.7, that would have increased our money supply in the economy, and that would have been lent out to entrepreneurs, and inflation would be single digit. That would have actually helped us. When you look at remittances, we're talking about $1.4 billion, probably close to $2 billion a year. Imagine if all this $2 billion was being lodged at the South African Reserve Bank, and the buying and selling in Zimbabwe was actually happening within our domestic currency, and there was no increase of.
Let's call them Zim dollars.
Zim dollars.
So we're in the 21st century.
Sorry, before we move away from this,
I'm not moving away from it. You haven't had any. I just mentioned. I was just starting to make a point about something.
I just wanted to ask him something
Sure.
to clarify on his point. So you are saying you're saying it must be backed by a strong currency or a basket of currency,
Which is,
but can it not be backed by something else?
It could be gold, for example, and we produce tons of gold, and then we put our gold in the South African Reserve Bank, and the South African Reserve Bank,
Or Fort Knox,
or Fort Knox, or wherever.
I
And,
like where
and
you've
in
gone with
fact, what you're saying, where you actually link it to some sort of production of a hard metal, where it's actually very useful for you, you then tend to find that South African banks, knowing that you are building this kitty or gold, will be quite happy to lend Zimbabwean entrepreneurs in gold mining to actually produce more gold, or platinum, produce more platinum. It actually makes a whole lot of sense.
A very pertinent question. And I'm interested in your take on this, because if you look at any of the best run central banks and currency regimes in the world, right? Whether you choose, whether you think it's the euro or the Singapore dollar or the Aussie dollar, whatever it is, right? If you look at any of them, they back their currencies with gold and foreign currencies, right? Now, if you think about the last 60, 70 years, right? And the reason why they use gold or US dollars or euros or these hard currencies is because these particular currencies and gold tend to be good hedges against inflation. You're more likely than not to store your value and retain it, right? Now, if you look at the last 60, 70 years, there's an asset class that has done much better than gold or any hard currency.
I hope you're not about to say what I think you're about to say, but anyway, carry on.
Right, which is the S&P 500, right?
Okay.
The S&P 500 over the last 60, 70 years has consistently outperformed gold. It's outperformed any of the world's 7 hard currencies, right? None of the world central banks actually holds S&P units as reserves. And I'm just curious, would this be completely out of the question? Would it be unwise?
Completely out of the question, because any buccaneering should be done by entrepreneurs.
How is the S&P 500 buccaneering?
It is buccaneering.
It's an index that is consistently outperformed every other asset class in the world. And it's as liquid as any currency.
Okay, so you remember we made fun of Tinashe and risk neutrality a few weeks ago?
Yes, we did. And it's always good fun making fun of Tinashe.
But when it comes to currency,
yeah,
I do agree that there is such a thing as risk neutrality. Only when it comes to currency, because it's not the central bank or the currency board's job to seek alpha returns. And I'm scared of using jargon on the show, but seeking alpha returns or seeking risk, taking risk in the hope of getting return, is not the job of the monetary authority. It's your job as an individual.
I completely agree with you. And so this is, you're actually making my point for me, right? The reason why the Central Bank of China holds US dollars is because US dollars have a long track record of storing value, right? That's why you hold gold. And gold has been used as a store of value from time immemorial.
So that's not the reason. It goes back to George's point, which he articulated very well, on the two aspects of money, right? There's medium of exchange and then there's store of value. But what he didn't perhaps look at, which is the second iteration, is that your store of value must be easily changed into a medium of exchange.
I agree.
That's quite fundamental. So when we use a currency board, and the reason why we're actually using a currency board is because we're actually saying that only when you've got a certain basket of currencies that you can easily switch into a medium of exchange. Now, what you're saying is, if you have an S&P or real estate, can you easily switch those?
I'm not talking about real estate. I was very specific.
No, I'm I'm saying that
metaphorically.
Yeah, well, I'm saying that if you're saying S&P, so what's to stop us from using a whole litany of other asset classes?
So if you use real estate,
or the FTSE 100 or
whatever it is.
So
and what we're saying is,
I'll respond. I'll let you finish.
Transfer the ease in which people can transfer back into a medium of exchange is actually quite pivotal. And that's why a currency board is best. Because a currency board is best because it says that at any given moment in time, the reason why we have a currency run is because there's somebody within the local economy who wants to convert their Zim dollar into US dollar or yuan or whatever it is, an international currency. They don't want to convert into S&P. You don't make that decision for them. Okay. What they want is they want to convert into the US dollar.
So the pound sterling is a hard currency. Central banks all over the world hold the pound sterling, right? The UK is a 3 trillion GDP country. I can assure you that the S&P 500 is more liquid than pound sterling, right? So the idea that you then have a problem.
So why don't you? Can we,
from a liquidity standpoint?
No. Okay. So can we
with the S&P 500?
Okay. So you know why you would have picked the sterling, or why the sterling in Tinashe's version of a currency board, why the sterling would be part of your basket, is because you'd have said we trade
with the UK.
With the UK. So
you guys are chopping and changing. First you said it's a liquidity thing.
To
be able to convert it.
Okay.
right? And I'm saying the S&P 500 is more
when
liquid
we
than
trade,
sterling.
no,
Okay,
when we
okay,
trade,
you're the one who's screaming about being given a chance to make your point. Allow me. So the moment you've traded with the Brits, you've taken sterling risk. So, and I'm not necessarily subscribing to his version of a currency board, but assuming you go with it, you've accepted sterling risk. And all the players in the economy, by being players in this economy, are systemically exposed to sterling risk.
Agreed.
So you're not giving them new risk.
Okay.
But when you go and pick a new asset class,
Like gold.
yes, let's say you pick gold.
yeah, no,
Yeah.
give me gold. Yeah,
Yes,
you are.
you're exposing them to a new systemic risk,
Agreed.
and so on. So,
But it's okay to hold gold, right?
assuming you're going with that version,
Yeah.
but
So I'm saying-
one
I'm
of the
saying
reasons,
is the
but let's say we're talking about gold and Zimbabwe. Why somebody might raise gold and platinum for Zimbabwe is, again, there's such anchors of our economy that by being here, you're systemically exposed to gold.
And not just that, because not just the systemic risk, because there's actually a guy in South Africa who's sitting in South Africa and is saying, actually, I want one of the assets that you actually have, which is platinum. And I'm willing to even give you $2 billion if you can get that out to me. There'll be someone on the other side who's willing to take that risk. But there's no one, if indeed you're correct, there's someone on the other side who's saying, well, actually, I'm quite happy to take S&P risk in Zimbabwe. Like, why would somebody who's sitting in Singapore want to take S&P risk in Zimbabwe when they can directly take the S&P risk? Because remember, for us, it's what can we change? And what we can change is platinum, is gold, right? And the US dollars that we've actually earned by exporting. So we
All
export
the euros,
all the euros or the yuan. These are things that we actually have. And all these things that we have, we're depositing it in a safe somewhere. And every time someone wants that currency, we say, well, thank you very much. Here it is.
Well, no, it's every time one of us wants to do something outside the country,
Yeah, but
we go to that safe.
typically it's people who invested in them who are now moving out.
Yes.
So we're saying, oh, if you now want to go out, well, you can either have our US dollars or euro or sterling or yuan, or you can have our gold. And there's someone on the other side who's saying, I'm quite happy to take your gold.
I'm going to, for the purposes of this discussion, agree with everything you've said.
So thank you.
Yeah. And just, pose a question to say, so chances are, more likely than not, in fact, US dollars are going to be in this basket. Yeah. And I can argue, or I'm going to posit that the S&P is a proxy for US dollars. It's just as because it's denominated in US dollars.
For progress' sake, yes, we can put the S&P in there too. You feel better now?
I actually, on Metro principle, I actually refuse to put the S&P.
Can we
on
go for a
Metro
break?
principle, because, okay, so what happens when the S&P falls?
What happens when the US dollar falls, or when the pound falls,
Okay.
or when the yuan falls?
Fantastic. This is the premise of what money is. Because when the US dollar falls, it's the amount of whiskey it was buying. It's still $1.
Well,
US dollar.
not quite.
But
But
it is.
No.
It is.
No, I understand why you're saying that.
So the dollar index, remember our trade.
But what if the euro falls?
And we're saying when the euro when the euro falls, the products in euros don't fall. The products are still
And I think
exactly the same.
No,
price.
but I think the most
Whereas
simplistic-
the S&P
the most
doesn't
simpl-
buy
the most
any
simplistic-
product.
the more articulate.
Yes,
But
that's the problem.
Tinashe, the more articulate argument is we've chosen to have US dollar risk, euro risk by making them major trading partners.
Yeah, because we trade in those currencies,
And
we don't trade in S&P. So that's why, on principle, I would never include the S&P.
But
Fair
anyway,
enough.
well,
Fair
let's go
enough.
for a break. When we come back from the break, you had a counter proposal that we will actually listen and allow you to make.
Okay, cool.
Unlike
I like
it. Unlike you.
I like it.
See you in a couple minutes.
wirisa rudzu ndaida makore mazana mana sawira uya timborangana timboronga tichine mukana handirambe ishe ninobvuma kana mati yangu nguva yakwana sawira uya timborangana timboronga tichine mukana daita isiva ramangwana taingovhunza ndewani mukana dainda isiva ramangwana taingovhunza nderani jana sawira uya timborangana timboronga tichine mukana sawira uya timborangana timboronga tichine mukana daita isiva ramangwana taingovhunza ndewani mukana dainda isiva ramangwana taingovhunza nderani jana sawira uya timborangana timboronga tichine mukana.
And we're back. And we must listen to your out of this world preposterous argument.
Well, it's not really out of this world. It's actually a question of sorts for Tinashe and his idea of the currency board, which I think he's made a very.
I want to hear your proposal.
He's made a very cogent case for the currency board, but I was gonna say earlier, it's the 21st century, right? And why actually have humans in the loop, right? I don't know whether you guys are familiar with this phenomenon that's emerged lately called a DAO, a digitally autonomous organization. Mm-hmm. Do you guys?
But I mean, simplified.
And fundamentally, what that is it's a set of rules that are captured in software about, for example, how the three of us are going to interact. Let's say you've got a brilliant new project that's going to make us all rich, and we're all going to chip in as equal shareholders. And we want to have rules about how we're going to interact and allocate capital and assign management roles and make certain key decisions, right? So instead of what you do before, which is have a shareholders agreement, get a bunch of lawyers, put that together. This time around, you'll actually get those lawyers and a bunch of software developers, and they would encode those rules into a digitally autonomous organization. So the organization actually has these rules, and it doesn't require human input to make these decisions. So in the case of a DAO that runs a national currency, right, you encode it with the rules, okay? Your currency is going to be backed by gold and these 5 or 6 global hard currencies, right? If you want to issue more of your local currency, there has to be more of these things in these ratios.
The question of wanting to issue doesn't come up. When your holdings get to certain levels, the computer prints more money.
You have the latitude at the beginning to set up all the rules. So you can, you can imagine, the various circumstances you're going to find yourselves in when you're going to need to issue more local currency, when you're going to need to take it out of the system, when you want to have a higher ratio of reserves, when you're in a crisis and you need to have a lower ratio. But fundamentally, it's a DA, you can't have a human decide that, well, these set of circumstances are special or different, so I'm going to behave in a way outside.
Extraordinary times call for extraordinary measures.
This is, and the idea of it engendering more faith and confidence in everybody who's going to use the currency issued by this DAO is, that there isn't human discretion. There are no decisions being made or shadow committees nudging things in one direction or not. It's public, what the constitution of this DAO is and what all the rules are. And you can sleep well at night knowing that nobody can fiddle with this thing, and you wake up and there's twice the amount of local currency in circulation and your money loses half its value, right? So this is the question to Tinashe, to say, well, you in a currency board, you actually have a bunch of human beings sitting around a table.
No, you don't. It's not a board. It's not a company board. It's an authority.
But it's
Right.
populated by
And we
humans.
need to- no, you don't actually even
No,
need
but-
human beings.
But semantics.
No, you don't even need human
But
beings.
we're being pedantic.
No, we're actually
No,
not. being
I'll
human
explain
beings,
what- I'll
because
explain- I'll
it's
explain
simple,
why-
straightforward. We
I'll ex-
actually don't need
But
human
Tinashe,
beings.
calm down. Don't get emotional. No more cake for you. You are actually
That's
what
like
Rufaro is
saying
suggesting.
Tinashe is like saying stop being Tinashe.
What Rufaro is suggesting actually fits very well with what you're suggesting. It's actually they're not.
Yeah, no, I don't have. What
they-
you're doing is you're taking the analog version of a board currency
And digitalized.
and digitalizing it. That's all you're doing.
Yes, but
Yeah.
that's exactly what a currency board is.
Is
It's a set of
exactly.
rules and formulas.
It's not people. It's a set of rules and formulas. It's not people.
So
Okay, I think that's an important
Yeah.
point of
So
clarity,
the only-
because
the
a lot
only
of people when
difference-
they hear board, they literally think about a
gray
table.
haired old men.
Yeah,
Yeah.
no. And there are different versions of the currency board. Remember ours, we wanted to be to tie in with the SADC thing. That's why we're talking about SADC and we're talking about all these different banks. It could actually be the local banks.
So it could be an audit firm. There's a country that has an audit firm, is it?
Yeah,
Because
it
which
could be an
country, which
audit
country is it?
firm. I'm not. I think one of the
South American country.
It should be Peru or so.
There were an
So
audit
there's
firm.
something that I learned from you actually that I've also found quite interesting, and I want to hear Tinashe's perspective on this, which is that Germany had such a horrible experience with hyperinflation, just like us, but unlike us, the Germans being quite
Germans.
I'm not going to use the word that starts with A, but they decided that they never wanted to experience that again and were very serious about it. And they created a whole bunch of laws that make it a criminal offense, right? For people working in their central bank, working in their treasury, to take a set of actions that leads to a relapse into hyperinflation. So on your first day on the job that
If I print too much money, I'll go to jail.
don't you think that? So what are your thoughts on that kind of harsh legislation in general?
I'm a libertarian, so I don't think that would be the way I would go. And I'll tell you why I wouldn't go that way. Because the people that will enforce that rule are the same people who are breaking the rule.
Look, you see,
So to me, it doesn't
for me,
make any sense
what we have definitely learned. Let's not go back 56 years. Let's go back in our adult lives.
Mhm.
What we've learned over the last 25 years is you cannot rely on the people at the front of the bus, A, knowing what they're doing, and B, having our best intentions at heart.
No, they don't.
Well, they may or they may not, but
There's this thing called moral hazard.
let's create
No, I agree with
let's
you,
create
and
a
I-
system that doesn't rely
Yeah,
on
but so
Which
The
is
reason-
interesting because the digital guy wants us to go back to analog.
no.
Like,
So,
you
so
introduce
that's not
digital.
analog. That's
You,
not
know, you
analog.
remind me of our production team, eh?
Look, it's
Our production team has gone digital.
It's,
But
it's,
they always think analog.
No. But you know what? There's certain ideas, and this is
And that's referral for you.
I'm borrowing this from
The guy will give you the best concept, digital, and then suddenly he's going back.
no. So
To analog.
it's actually not going back. So
It is.
so
Because if you've created the rules, everything, why do you need human intervention?
so let me
Why do you
contextualize.
need to create laws to punish
No.
humans? that-
So let me contextualize what I'm saying, and this actually comes from a technological guy. This idea. So allow me to explain it. The guy who founded Amazon. He says, look, people always ask him, so what's going to be the next big thing or cool thing in tech, right? And he says, as a guy who runs a huge company, he thinks that there's another question that people don't ask often enough that's just as important, which is 5 years from now, 10 years from now, 20 years from now, what's not going to change, right? What do we know for a fact today people are still going to care a lot about in 5 years, in 10 years, 20 years? And you have to have a plan for those things. And one of these timeless ideas, I think, is the idea of skin in the game, right? If you are a bureaucrat involved in helping to manage a currency, and your personal life does not change in any shape, size, or form, you're not affected in any way, whether you do a great job or a horrible job.
I like that argument. And another argument.
I actually disagree.
No. Let's take it full circle. Another name for
we
skin.
haven't even implemented
Another
half
okay,
the constitution
hang on.
reforms. And you think that in 20 years' time,
no more cake, no more tea. Another name for skin in the game is self-interest. Right? So as much as you think threatening to send them to jail or incentivize them to behave in another way, I'd put a completely different argument to you that it just raises the threshold of the amount of money they're willing to go to jail for. So
you have more buccaneers.
But if we can actually take it away from
I'm just putting it out there. I'm not saying this is a good idea.
The market will punish. The market should punish and reward people, not the law.
But anyway, so we get to this point where we are actually in agreement that we would like to have a set of rules and formulas
and principles
that take away the ability to issue or withdraw currency
willy-nilly
or otherwise from any individual or group of people, but rather vest it in a set of rules. The set of rules could be anchored in a bunch of currencies. It could be anchored in.
It could be changes as our trading partner changes.
It could be anchored in commodities. It could be anchored in anything else. But there's a set of rules that is up there on the board. Everybody in the classroom can see it, and we all understand under what circumstances there'll be more currency issued. We understand under what circumstances currency would be withdrawn. Is this a better solution than we've come up with until now? Would this yield a more stable currency and monetary environment?
Yes, but it won't solve our economic problems, but it will solve the currency problem.
But I actually beg to differ. I think that our biggest economic problem today in Zimbabwe is the currency.
No, it's debt.
So we can, depending on whether George allows us, we can actually go into this.
We're in a debt trap.
I don't think
so
we
can solve the currency issue because once
but I'll actually put it to you that it will solve your debt problem as well. It won't solve your legacy. It won't solve your legacy debt problem, but it will avoid future debt problems. Why?
Yes.
Because once the rules are there, anybody who wants to lend you money, or anybody that the government tries to convince to let them do anything, looks and says, but according to the rules that you put on that are on the board there, you're not going to be able to pay me. So you won't get a new debt problem.
So here's the thing. Here's the thing.
You are. But our problem is our legacy.
No. You see, so here's another way of looking at it. As long as you have the current currency and exchange control regime, right, it's actually impossible to address the debt problem.
But that's what we're discussing.
So
what do you think we've been talking about for the last hour?
No. So my point is it's a bigger problem than the debt problem, because you can't solve the debt problem without solving
the currency. Okay.
Yeah. So it is the single most important problem in our economy at the moment.
The monetary issue is, I think, at the heart of all our problems, because as long as we have the current monetary framework, the government can overspend. And in the process of the government overspending, we create arbitrage opportunities that then just make it a jungle.
So the way I look at it is it's iterative, and these are doors. So where I agree with you is that door number one is actually the currency problem. But door number two is the debt problem. Then door number three is the production problem. So they're subsequent, but it becomes easier.
But they're all related. Do you agree?
Yes.
That's why I say door number one.
No, if you put it like that, we're in agreement.
Then we're in agreement.
So
in fact, can you say that again and close the show?
Okay. All right. So what is clear is we need to solve the currency problem. And to solve the currency problem, what we need is a monetary authority, which we term a currency board. And the currency board, it's not individuals on a board. It is actually rules, formulas, but most importantly, principles that govern how our currency is issued, coins or notes are issued in the country or taken out. And these rules are available for everyone, and everyone can see them. And what we would suggest is that the basket of goods or the basket of currencies or basket of commodities be held outside of Zimbabwe, so that number one, governance issue, so that the governance of that basket of goods is actually done by a third party. And it could be the ADB, it could be SADC, Secretariat, or it could be the South African Reserve Bank. And then number two, that any banking that actually happens within country is governed by a regulatory authority. So there are two authorities that we think we need to have. The first is a monetary authority under the auspices of a monetary board or currency board, and then the other is a regulatory authority. And we think that solves the problem in door number one. And then once we've solved the problem in door number one, we can open door number two, which is the debt crisis. And once we solve that, we then solve the production problem. And I think that will set us well for the future.
Well said.
Yeah. This Martin Luther King look.
I have a dream.
It's been lovely having you along. As usual, you really shouldn't take us too seriously. As you can see, we're just three friends downing a bottle of
whiskey and sugar
and discussing things we ought not to be discussing. But we hope that it inspires you to think about some of these issues, to have discussions with people around you. And as usual, if you've got access to policymakers, raise some of these issues with them and see if we can make this a better Zimbabwe. Have a lovely weekend. Stay safe. Be good. If you can't be good at it.
Cheers. Cheers.